Today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar, plus investor sentiment. And also, given that it's tax season, Free Tax USA provides free tax software just like TurboTax with the questions and all that stuff. Free federal filing, which TurboTax also does provide free federal filing, but you have to pay for the software. And then for state filing, it's $15 for Free Tax USA versus TurboTax, $20 if you file early and $25 if you file later on. So you do save some money. And if you use the link down below, I do appreciate it. It does support the channel, so thank you so much for that. Overall, so thanks again. No extra charge to you if you use the link. It's just it does support the channel a little bit, and thanks again. Now, in terms of the whole entire video, I'm going to cover the investor sentiment first, then I'm going to go over the technicals, but a little bit of the calendar, high level technicals, and then get back to the calendar and share my thoughts. Hopefully you guys enjoy the video. Hopefully you like it. If you do, consider dropping a like towards the end if you find it beneficial. Now, in terms of investor sentiment for the week of March 19th, it went up to 21.6%, so higher than the previous 3 weeks, which was pretty much around ballpark of 19%. Not a significant jump, but nonetheless, it has been a little bit reversing to the upside potentially in terms of sentiment. And now in terms of bearish sentiment, so that was on the bullish sentiment. For the bearish sentiment, it dropped a little bit to 58.1%, so a little bit lower than the previous week, not necessarily lower than the 2 weeks ago, but at the same time, the bear sentiment is higher than the historical average. Historical average is at 31%. It's right now 58.1%. So you could argue pretty much almost double the sentiment is bearish overall. And in terms of bullish sentiment, it is lower than the historical average. Historical average is at 37.5%. Right now we're at 21.6%. So the market, for the most part, in terms of investor sentiment, is quite bearish still. And I would say based off technicals, technically rightfully so, but there's a flip that potentially could be happening soon. I'll explain that later. Now, in terms of economic calendar, the most important things I would say for the most part, and I'm going to go through this high level later on, would be predominantly, I would say probably Thursday for initial jobless claims coming out 8:30 a.m. We have GDP second revision for Q4, 8:30 a.m. as well. And then we have for Friday, which is the most important, PCE inflation numbers. So now these inflation numbers, and they're coming out 8:30 a.m. by the way, are considered to be more accurate for the Fed versus CPI and PPI inflation numbers. But there's been times that the Fed would kind of pretty much use CPI and PPI more so for PCE, I would say, potentially. But that brings me back to one point I wanted to make. Based off the last meeting that Jerome Powell spoke about in terms of conference, the last FOMC interest rate decision, they decided to hold the rates, so no rate cut or increase during the last meeting, which was on the Wednesday. But what they stated was they're looking to see potentially to have 2 rate cuts this year. Now, I think that will come true. It kind of seemed like it was just like potentially 2 rate cuts. We don't know, but I think most likely that will happen because from what Jerome Powell stated, and I'm going to post a couple of shorts too as well for the clips of when he stated this, but essentially it sounds like even though they might be worried about this current administration for what they stated, and this is not my opinion, I believe this current administration is doing well in terms of the economy, but they're just not focused on the market for the time being because there's so much on their plate. But that's just my opinion. In turn, later on from what they're doing will bear fruit in a way and where the market will go up. But I think that focus will come later on. But the Fed is worried that this current administration will cause an increase in inflation, right? But the data has shown that's not the case for the time being, because if you remember the CPI and PPI inflation numbers, they came in better than expected in terms of being lowered. But at the same time, the expectations were to come in on the lower side as well, so inflation coming down. And I was looking at specifically, and this is just my opinion, I'm not a professional, so please do your own due diligence and research before buying and selling, but the month-to-month coverage, that's what I was looking at, not the year-to-year, because you could argue the year-to-year would be, let's just say, more attributed to the previous administration, arguably so, right? But to the benefit of doubt kind of thing, I would go for the month-to-month conversion, and there was a decrease of that of inflation. So technically the data is supporting that, in essence, inflation is not increasing in essence, and therefore from what Jerome Powell stated, there was about 2 clips essentially saying like recession's not on the table, this and that and all stuff. Now you could argue, devil's advocate, that they also during, like for example, during the housing crisis, and I don't think we're anywhere near that level, they were basically denying that any kind of issue was happening. So you could argue, well, the Fed doesn't necessarily always say the truth, and they're more like protecting for fear kind of aspect. But in essence, about 2 clips stating that there's no real concern for recession or anything like that. So in essence, from what they are thinking to have potentially 2 rate cuts, and it seems like everything's fine. Plus the data is kind of coming in and supporting that as well. But we'll see as in the PCE numbers come in, we'll go over that to see if that still holds fruition. Just because there's a couple points that they show a slight increase, but this is more for the year over year, but I'm going to get to that soon. Now, in terms of the technicals first, I'm going to go over that. I'm going to minimize this. I'm going to go over ETF, SPY, ETF for the S&P 500. Same thing, just different ratio. The overall movement is the exact same. Because the only thing is the prices are exact, are not exact, but in terms of ratio, they're the exact. And then I'm going to go over ETF QQQ, ETF for NASDAQ, and then the Dow Jones itself as well. Now, if we go over SPY, ETF for S&P 500, if you look at the chart overall, it almost looks like there's a potential reversal to the upside. And what I'm going to show is, let's say for the 1 year chart, right? This MACD line indicates if we're in a bearish or bullish movement. And right now, it was in the bearish movement, but it has crossed over to a bullish movement. Volume has been increasing as of recent, more on the buy side. And if you look at the 5 year chart, it is at essentially the 50-day moving average of the 5 year chart. 1 month, 3 month, and 6 month are all showing bullish movement to the upside. The S&P, NASDAQ, and Dow Jones are showing the identical stuff. Now, the only thing is, though, with the 1 month, 3 month, and 6 month, so I'll just quickly show 1 month, bullish movement. You could argue it's coming down a little bit, but a bullish movement for the 3 month, bullish movement for the 6 month, right? And then NASDAQ and Dow Jones, I can show them all high level actually right now. NASDAQ, bullish, 3 month, bullish, 6 month, bullish as well. And then the Dow Jones, same thing. 1 month is bullish, 3 month is bullish, and 6 month is bullish as well, right about here. But actually, 3 month for the Dow Jones is one quick thing. It's about to cross over to a bullish movement. So a little bit of a difference there. But if you look at the 1 year for all three of them, pretty much exact same. Cross over to a bullish for the S&P, cross over to a bullish for the NASDAQ, and then for the Dow Jones, cross over to a bullish. Now, the only thing is, though, does that mean we're starting to head up higher? Because technically, if you look at the 5 year chart, they're almost all at the 50-day moving average as well. So this is a 5 year chart for the S&P, 50-day moving average, give or take ballpark, because we saw the quick dip right about there. But you could argue it's maybe stabilizing. The NASDAQ, 50-day moving average, lower than that. You could argue it tested it, but it did not pass it. And the Dow Jones, 50-day moving average, potentially bouncing off it. The only reason I'm saying you have to be a little bit cautious, it's not all like rainbows, sunshine heading up higher, is the sentiment is still more on the bearish side. And I would say rightfully so, because if you look at the 5 year chart for all of them, they're all bearish movements, right? In terms of MAC lines. So S&P, this is the S&P, bearish movement. S&P right about here, bearish movement. S&P right about here, bearish movement. And then the all charts are exact same. They're about to cross over potentially to a bearish movement right here. Well, it's bullish right now, but it's about to cross over potentially. NASDAQ, bearish movement or bullish movement, but potentially crossing over to bearish. And S&P as well. They almost look identical, but bullish movement and crossing over to potentially bearish movement. So if I were to take it any way, I would assume that technically we'd be heading up a little bit higher, potentially for the week, and then leading up to where the inflation data comes in. And if the inflation data comes in favorable, there's a good chance that sometime next week, some of these data points in terms of technicals might commit to this upside bullish momentum where the 5 year chart actually starts reversing. Now, the reason why I state that is because I would say more so for the S&P and Dow Jones. NASDAQ is a little bit iffy, but because if you look at the latest data points coming in, this is the S&P 500, the volume is more on the buy side. Same thing with NASDAQ, volume more on the buy side. The only issue I have about the NASDAQ is right now, currently it's underneath the 50-day moving average, and you could argue probably testing on it, but we'll see. But this curvature could be at the end of the dip where we start reversing to upside, just like we've seen here. This is the Dow Jones, by the way, where it was like dipping, and then now it's the recovery point where we start heading up higher. And then you would argue, okay, what about this alt chart? The alt chart right about here, let me switch it over, is looks like clearly heading down, right? And if you remember from the past videos I've shown, for example, this upward trend resistance line dating back since 2010. Again, this is the S&P 500, specifically SPY. And then upward trend support level dating back since 2010, and an upward trend support level for 2 major crashes dating back since 2010. And we've already gone pretty high enough where in the past we've gone high up to the upward trend resistance level dating back to 2010. And you could see, like, for example, the market was going up, but it kept us underneath cap. So we could technically get to that level. Even right now, we're not even right now, but right now we could get to that level and then continue to the upside. But we could end up heading lower. Sorry, I'm stating a little too many things. But what I want to state that is the predictability is not 100%, where even if we're dipping down, potentially to cross over to the bearish movement, potentially, it doesn't guarantee that we have to, even though we're in the mid zone, we could rightfully so drop down, because we've seen in the past as well. We're back in October of 2023, we headed down and could have went down to the bearish movement overall, and then ended up going down to these two major crashes, right, within that zone. But we didn't, we bounced up. Now you could argue that we were at a right support level and then bounced up off that. But at the same time, let me double check NASDAQ if it actually did the exact same thing. Okay, not necessarily the exact same thing, but pretty close. We did dip lower than the previous time of October 2023. But at the same time, it wasn't necessarily, I'm sure there was some kind of support level at this level, but it wasn't necessarily this upward trend resistance level or upward trend support level we bounced off of. So NASDAQ is the exact same thing as the S&P almost. Upward trend resistance level dating back since 2010. Upward trend support level dating back since 2010. There have been breakouts for the NASDAQ though, and you can see bounced off of support even if I went in closer a little bit. So this dates back since 2020 to 2022. You can see a couple bounce off of support as well, and clearly it was resistance, broke through 2020 to 2022, came back underneath it and then went back up, false breakouts, and then we're underneath it right now for the time being. But essentially the support that it bounced off of going back in October 2023 that I wanted to show for the alt chart, I think it was, it didn't bounce off the upward trend support level dating back since 2010 like it did for NASDAQ. So we could see a reversal again leading up to 1 month, 3 month, and 6 month bullish movements for the most part for NASDAQ, S&P, and Dow Jones. And then for the 1 year chart, it's a crossover to a bullish movement. 5 year chart potentially coming in with the new data points that are predominantly on the buy side, and the alt chart could reverse for all of them if that is potentially the case, right? And then in terms of economic calendar, so that's just on the high level side. Now, in terms of economic calendar, basically for Monday, March 24th, we have S&P Flash U.S. Services PMI for the month of March, S&P Flash U.S. Manufacturing PMI for the month of March. I'll get to the PCE inflation numbers soon, but just going through day by day. So then Tuesday, March 25th, we have S&P Case-Shiller Home Price Index for 20 cities for the month of January, Consumer Confidence for the month of March, and then new home sales for the month of February. All that information is coming in at 10 a.m., 9 a.m. And then for Wednesday, March 26th, we have durable goods orders for the month of February, durable goods minus transportation for the month of February. St. Louis Fed President Alberto Musalem speak at 1:10 p.m. Then Thursday, March 27th, we have initial jobless claims from March 22nd, GDP second revision for Q4, Advanced U.S. trade balances in goods, advanced retail inventories, advanced wholesale inventories, pending home sales, and then Richmond Fed President Tom Barkin speaks at 4:30 p.m. And then on Friday, March 28th, at 8:30 a.m., all the PCE inflation numbers come out. We have personal income for the month of February, personal spending. So personal income for the month of February, previously 0.9%. This time around, I'm expecting 0.4%. Personal spending for the month of February, negative 0.2 previously. This time around, they're expecting 0.6. PCE index number for the month of February, previously was 0.3. This time around, they're expecting 0.3, so flat, no change. PCE year over year, previously 2.5. This time around, 2.5. So they're expecting flat for PCE inflation numbers. Then core PCE index inflation for the month of February, 0.3 previously, 0.3% this time around as well, so flat. And then the only increase is the core PCE year over year. Again, the core portion is energy removed out of it because energy is considered to be volatile in terms of prices. And previously it was 2.6, this time around expecting 2.7. So that one is a slight increase in terms of inflation. But again, that is a year over year reflection. And plus there was a talk at one of the conferences, I think it was like 3 or 4 conferences back, where they were predominantly looking at month to month. And one of the analysts or journalists asked, are you guys looking at month to month or year over year more for the most part? And they basically answered that they're looking at month to month, which is surprising in my opinion, because I would assume that they would be looking at year over year. But they predominantly, basically from what Jerome Powell stated, is more focused on month to month, which is interesting. But if that is the case, then this core PCE year over year, even though they're supposed to be more focused on the core as well too, there's been a couple times that they didn't focus on the core, but this is the core which they should be focusing on, and on the year to year. And technically there's a slight increase in inflation, but from the past talks and what they've stated, they're more focused on the month to month and not the core, which is interesting enough. But it might be when they see fit, who knows? But yeah, slight increase on that part. And then we have consumer sentiment final for the month of March. Again, they should be focused on the core PCE year over year or core PCE in general. But there's been times predominantly more focused on the month to month, and then more predominantly not on the core, which is interesting enough because, again, that includes energy prices into the mix, which is quite volatile in the prices, but we'll see. That's basically it for today's video. Hope you guys enjoyed it. Hope you guys liked it. If you do, consider dropping a like. It does help the channel, so thank you so much for that. I do appreciate it. Again, if you want to use Free Tax USA, consider using the link down below. It helps out the channel, so thank you so much for that support. Appreciate it, and I'll see you guys in the next video. Take care, God bless, and peace.